You know, we've been so distracted over the course of the last several years by nonsense, right? Making sure that we don't hurt anybody's feelings, making sure that we completely embrace green energy. By the way, at the cost of traditional energy, mind you, that we've completely ignored the elephant in the room, which has been Vladimir Putin increasingly trying to, take over the world. I don't think he's done it, Ukraine. Mark my words, this is not going to be the end of it. And if he is allowed to get away with taking Ukraine, all bets are off. Hello, everyone. Welcome to the Trish Regan Show. I am Trish. Just a reminder that portions of today's program are brought to you by Legacy Precious Metals. There has never been a better time to invest in precious metals, specifically. At least I've been making the case for gold for quite some time. So go to legacypminvestments.com, legacypminvestments.com. Very quickly, I want to remind you all that after this program today, I'm going to be over on my locals channel in my locals community. I want you to come and join us. We have a live program there today at 4 p.m. Eastern. Again, that's 4 p.m. Eastern on locals. Meanwhile, a quick note about making sure that you join a wonderful organization, truly wonderful organization that is fighting for our values. Our values, when I mean that, I mean my values, your values, conservative values in Washington, D.C. and throughout the country every single day. And that is AMAC. AMAC, which you can go to at amac.us/Regan for as little as $16 a year. You can get membership. And guess what? You get all kinds of discounts, which I love, right? Free hotels, free restaurants, travel, all those kinds of deals. You get all that. It's kind of like AARP and then some, because this organization is actually standing up for your values. They want to protect your income in light of all the inflation that's coming our way. So go to amac.us/Regan, sign up for membership. I think it's an important thing to do at this moment in time, especially when so much is at stake. And quickly, I want to again mention, as we watch a market that's kind of all over the place, gold is one investment that you can count on over the long haul. It's the reason I like it. Look, it's been around for thousands of years. It's one of those things that you can put in your portfolio and know that, you know what, 20 years from now, you're going to be able to help preserve some of the value of your portfolio. There are things that you can do, a gold-backed IRA. You can actually buy the physical stuff yourself. We know inflation's here and not going away, so it's important to guard against that. Make sure you've got a diversified portfolio that includes precious metals. Again, I go to gold. 1-866-589-0560 is the number for Legacy Precious Metals, the company I trust when it comes to investing in gold. LegacyPMInvestments.com. Again, 1-866-589-0560. But let's get back to what's happening right now. And, I'll start with this. And that is that there is so much naivete out there in this world right now that Putin has been able to capitalize on it. Think about this ESG stuff, right? Everything has to be ESG friendly in investing, which means, it's got to be equitable. It's got to be societal goodness. It's got to be all these, these things that frankly don't have anything to do with capitalism. But you know what? I'm not gonna completely pick on ESG, green energy. You know what? I don't have a problem with green energy. I'm willing to take energy from any source I can get. Right? I mean, we need all the energy we can get. Just look at what happened. We've got oil skyrocketing to $100 a barrel. We've got Russia emboldened because oil prices are so high. And I'm sitting here going, well, how did this happen? I'll tell you exactly how this happened. I warned about this. In fact, last summer I told you to buy oil because we're going to $100 a barrel. It was right. I mean, I didn't think we'd be seeing Putin necessarily do this. I knew it was a risk. I didn't really think he'd actually bomb Ukraine. Although our intelligence community, and I'll credit them for this, they did warn about this. But here we are. And sure enough, oil continues to spike. And so if we don't have investment in U.S. domestic sources of oil production, then it will cause oil prices to go up. Okay, that's just a no-brainer. I've said this all along. You layer in what's going on the international stage, and it really is a wake-up call. In other words, we as a country need to wake up and say, wait a second here. Wait a second. We need to take care of ourselves first. And if we want our own economy to be prosperous, we need to have cheap sources of energy. So I'm okay with green. I told you yesterday, you can paint every roof white, okay? You can make sure that you've got charging stations galore and you encourage this, green energy EV vehicle revolution. That's fine. But don't in the interim completely cut off 98% of the country that relies on traditional fossil fuels. You got to do this in tandem. You do, because you got to keep energy prices down for us, and so that you don't embolden the likes of Iran, the likes of Russia, Venezuela, all the bad guys, right? Like, why not have our own energy so that we're not having to get it from the bad guys? These are basic things that I think any kindergartner could tell you, and yet in this naive moment, as we strive for political correctness, we've completely gotten away from reality. And it's wrong, it's shameful, and I'm angry because we're in the position we're in right now because of poor leadership. Poor leadership coming from Washington, D.C. There was a story in today's New York Times. Guess what? We got all the intel that Putin was about to do this, and we took it to China. We sat down with China and showed them everything, and they were like, and they showed it to Russia. It's right there in the New York Times, not exactly a right-wing publication, pointing out that we shared this intel with Russia, with China first, who shared it with Russia. Why are we being so naive? Why aren't we recognizing that the world is not that nice a place? And there's a lot of people that are acting in their own self-interest, countries that are acting in their own self-interest. It's time we act in our own self-interest to preserve our own economy and to make sure that people like Vladimir Putin and countries like China do not become the threats that they have become. So now we're in one of these moments where Joe Biden is going to be really tested. Does he have the strength to stand up to Vladimir Putin? Or is this going to be just like Crimea? I mean, Putin must be thinking, hey, I was able to take Crimea while Barack Obama was in office. Why not, make it a twofer and go for the whole thing this time? I do think that we are very much at risk now of seeing Ukraine become part of Russia. He's made that very clear, and I'm not sure that we have the wherewithal. By the way, I'm not saying this means we got to go to war, we got to send troops. I don't want that. Believe me, I do not want that. I want to sanction the bloody hell out of Putin, out of Russia, out of anybody who's going to do business with them. And yet, what are we seeing right now? The world's not on board. I mean, they talk a good game, but heck, Biden didn't even enact SWIFT. SWIFT, the worldwide banking system. What you need to do was cut Russia off from SWIFT. He didn't do that. He didn't even sanction Putin himself, just his buddies. And then what do we find out? We find out that all these other countries, they don't want to fully go through with the sanctions that are being negotiated this moment. So, European countries are saying, okay, we have to sanction. And yet we learned today through the Telegraph, the newspaper over there in London, through the Telegraph's reporting that Italy has a carve-out for Italian luxury goods. So, Gucci and Versace and all this stuff, they can still sell to oligarchs in Russia. You got to be kidding me. We're learning, again, from the Telegraph's reporting that Brussels has a carve-out so that they can sell diamonds to the oligarchs in Russia. I'm like, what is the point of sanctions? What is the point of the world actually standing up for Ukraine when everybody's negotiating some kind of backroom deal so that they can still have their companies in their countries succeed? It doesn't work that way. I told you yesterday, North Korea, we've been sanctioning North Korea for decades. And yet, North Korea has managed to build some pretty aggressive nuclear weapons. And their leaders live in the high life. It's just the people that have paid the price. If you do not have the entire world on board with sanctions simultaneously working together and making sure that there's no backroom deals, then what good is it? We need, and I don't think that we're strong enough, I just don't see the will from Washington. We had the intelligence, they didn't do anything with it, and now we're where we are. But I don't see enough will. But what we need to be doing is we need someone in the Oval Office that says, hey, Italy, you know what? You're going to violate those sanctions because you want Gucci and Versace and whoever else to be able to sell their stuff to the Russians, well, guess what? We're not going to do business with you. We're not going to allow you to sell that stuff to Americans. That's what we need to be doing. We need to cut Italy. We need to look internally to ourselves. We are a terrific economy. We have tremendous sort of power that we don't use, that we don't recognize. As the world's largest economy, we need to stand up for what's right, and we need to tell everyone else, you're with us or you're against us, okay? This is very simple. Hey, China, you want to still do business with Russia? Well, guess what, China, you're not going to do business with us. And this is where you need American corporations to be in sync with patriotic duty. And you need the White House and you need leaders in Washington sitting down with all of them and saying, look, this is how it's going to be. And yet, instead, we've got our ambassadors sitting down in Vienna next week with Russian ambassadors to talk about Iran. Russia there working on behalf of Iran to negotiate with us. I'm like, what the heck is going on, guys? There's a really mixed up situation here. It's all screwed up, and I believe it's because of a lack of leadership from the top. Now, the reason this is going to be so challenging is because if you're telling me that the only thing that Russia's going to respond to in this case would be tanks and weapons, then this is going to lead us into a conflict which, again, is unnecessary. If you took the medicine early on in terms of financial pain, then you wouldn't have to risk lives. But no one's willing to do that. Every country trying to look for some kind of loophole, and us allowing it. And so ultimately you're in a situation where, you're going in there with American troops. And I know the president has said he's not going to do that, but I worry there's going to be other kinds of proxy wars out there. And I think that the danger here is just beginning. Meanwhile, we've got a very screwed up situation here overall, right? Really, really messed up, because it's like everything all at once. On the international front, on the border front, certainly on the inflationary front as well. You know, we've been watching the markets this week, and we've been all over the place, which speaks to me about sort of the insanity of the moment. I mean, here we are on the brink of possible World War III, and markets are going up. It's like we're so divorced from reality, but we've been divorced from reality for a while in the stock market. And while, look, I'm all for markets going up, I'm also a realist in that I question how long can they go up, right? Is this going to go on for another 5 years? Really? I mean, how do you think about investing in this environment? Maybe you want some exposure to equities, but simultaneously, you want to be able to protect what you have. You want to be able to grow it at a reasonable rate, certainly above inflation, for goodness sakes. Inflation, which I don't think is going to change anytime soon. Just look at what's happening to energy prices. And you can imagine that if we go after Russia's sources of energy, and that's what's expected at this point in time, that will drive energy prices even higher, leading to more of an inflationary effect. So what do you do as an investor who's trying to protect your wealth in this kind of environment? I'm so excited to bring back on the program with me today the head of Key City Capital, Charlie Dombeck. Charlie, welcome back to the show.
Oh, it's great to be here, Trish. And certainly we're in a very uncertain environment with just massive amounts of volatility. And I think you just really hit it on the head. The gains that we've experienced over the last day and a half certainly are not sustainable. I think what happened is we lost about 900 points. And then there was a little bit of discussion that Russia might be willing to negotiate and back off their invasion into Ukraine. And the markets poured a bunch of capital back in, which allowed them to see the gains we've experienced. But again, it's not sustainable. And what I point to is, we've lost about 9% of value in the S&P in the last month. So year to date, we're off. I suspect that the markets are going to continue their gradual decline over the next 12 months. And the reality is the Federal Reserve has not even begun to raise interest rates. And I know the market has priced in some interest rate increases, but there could be as many as 8 to 9 interest rate increases. And certainly the market hasn't priced in the effect that those increases are going to have on the economy. So it's really about, where do you find a store of value in these times? I don't certainly want to be invested in equities where we're seeing this kind of volatility, and who knows what's going to happen geopolitically on the global landscape? Who knows what's going to happen with interest rates? So I like commodities. I like passive rental real estate. I like asset-backed lending. All things that perform very, very well in a time where we have high inflation, high volatility, and uncertainty in the markets. Those asset classes perform exceptionally well.
Okay, which is good news for you, since that happens to be what you specialize in. But look, I mean, I think it's a good place to be right now. Certainly, long term for investors. I mean, I think real estate is one of those areas that, if you're attuned to the market, right, in terms of the specific realty markets, there's an opportunity there. Because just look at what's happened, Charlie. I mean, you think about the mass migration out of urban areas, out of places like the Northeast, and into states like Florida, Texas, where I know you are investing heavily, and the team there at Key City Capital. How does your specific investment, if I were to call up Key City Capital today, like, how would that work?
Well, we offer Regulation D funds to accredited investors in a minimum increment of $100,000. But I think what's unique about our business model is it's essentially recession-proof, inflation-proof, is an amazing store of value. And what I like about our business model is we're buying assets in the workforce housing environment, B- and C+ properties that typically range from 500 to 1,500 doors. So these are very large acquisitions, all north of $50 million. And that market segment is largely underserved by the investment community. Your big private equity groups, your BlackRocks, they want to buy Class A properties, and they want to buy assets that don't require a value add. There is very little competition for the assets that we are buying from other investors. First of all, you have to have a balance sheet that will allow you to borrow $80 to $100 million in each acquisition. We have done that. We were one of 9 last year to acquire an asset of $100 million or more. So we're seeing very little competition for the assets we're buying. We're creating about a 30% spread within 12 to 18 months simply by doing the improvements and the value add that these properties need and raising rents to market rates. So our business model is very, very good. And we've been a little bit lucky by focusing on Texas and Florida. That's where the bulk of our property portfolio acquisitions have occurred over the last 3 years. And the nice thing about these economies is there's a tremendous amount of runway left. When you have major corporations moving to Texas and Florida and moving their headquarters there and bringing their workforce, there's a 3 to 5 year window where the infrastructure gets built around those large moves. And so we're going to have continued population shifts into our markets, continued growth in rents, growth in the valuation of our assets, and our cash flow is going to be extremely good. So if you look at what's happened in the bond market or in the fixed income component of our clients' portfolios, it's been very difficult to get a rate. In those portions of our clients' portfolio, maybe 2 to 3% per annum. Well, at minimum, just on cash flow, you're going to get 9 to 11%. And then, of course, when we do really well, we're going to get rent growth, and we're also going to get appreciation on top of that. So real estate is just an excellent asset class in today's environment.
It's an interesting play on a bet on a more prosperous economy, specifically in those areas, because I think that's smart. You can't necessarily be betting that New York City or LA or San Francisco, given the challenges sort of structurally and with their tax, very, very high taxes, that they're going to see the same kind of benefits. But in places like Florida and Texas, I think that you can make that bet. Simultaneously, you've got the inflationary aspect of things going on, which, as a real estate holder, right, as a landlord, you're then able to charge more, conceivably, in rent as that inflation moves higher?
Absolutely, because what's happened for the home buyer is that many people have been priced out of the market. And when we start to see increases in interest rates, those properties that people want to buy and move into become more expensive. So people have to rent as an alternative to buying. And so many markets on the single family side have appreciated to a point where many people will not be able to afford those assets as interest rates rise. So it's going to put more demand and more pressure on rents. And so we're going to see shelter inflation. We're going to see rent growth in our properties because people are going to use those assets as a place to live until they can afford to buy a single family residence. So that's why I like rental real estate in an inflationary environment, because rents rise and we will cash flow very well and create the kind of yield that our clients can view this asset as a store of value and kind of eliminate the risk from equities, from market volatility, and all of these geopolitical and Federal Reserve
Not to
issues.
mention, I should point out, having your own portfolio that you have to manage of rental incomes, because then, the plumbing breaks down and they're calling you. And you're like, wait, what do I do now? So there's, an ease, right, of transaction there, and that you're not on the hook for trying to maintain these properties yourself. Walk me through it. If I put $100K with Key City Capital today, how long is it locked up for? What would I expect in terms of returns? How, it doesn't sound like it's tremendously volatile. It sounds like you're expecting a certain kind of dependability there, but walk me through what my returns might look like and over what time period.
So when you put $100,000 with us, you are going to place your capital in our fund for about 5 years. Each year, you're going to earn a rate of return from 3 separate components. You're going to get a fixed, guaranteed premium, which is 8% per annum. And then above and beyond that, you're going to get a share of operating profits and gains on sale. The share that you receive as an investor is 80% of operating profits from rents and 80% of the gains on sale when we sell an asset. We, as an operator, get the 20%. That's how we make our income. When you put $100,000 in our fund, your account gets credited with the $100,000. There's no commissions, there's no broker charges, there's no offsets. So every dollar you put into our funds gets invested immediately, and your earnings start to credit the day your funds get placed into our capital pipeline. So that's how the fund works from a rate of return perspective. From a performance perspective, our cash flow is about 9 to 11% on average in the fund per annum, and we'll pay down our loans by about 3% per annum. We're creating about a 30% spread on the value of our properties within 12 to 18 months, which averages about 5% per year over the life of the fund. Okay. And then we've been the beneficiary of a very strong real estate economy and are getting between 3 and 4% per annum rent growth. And we've been getting double-digit appreciation. So if you add up all these individual components, you're getting close to 30% per annum. Will we always be able to generate 30%? Maybe not, but I will tell you, we will always be able to deliver high teen rates of return consistently in this portfolio. And if you think of the alternatives, if you get an 8% premium guaranteed per year, compare that to a bond or a municipal bond. And you get a tax shelter. So you are considered a fractional owner of every asset in our fund, and you get a K1 and you get a depreciation offset, which means that 8% premium you get per year plus your 80% share of operating profits is fully offset by your depreciation deduction. So your after-tax rate of return is actually higher than what I've illustrated.
Wow. Okay. So that's a lot for people to take in. So I encourage them to, hit rewind and listen again. But very quickly, just the tax component of this, this is considered capital gains, right? Anything that you're explain that one to me.
So your preferred rate of return of 8% and your share of operating profits is considered ordinary income. But again, that income does not actually drop onto the 1040 because you get an offset or a reduction of that income from your depreciation that you get allocated. Okay. At the end of the fund's life, when we start selling assets, you're right, we have a capital gain item, and that's long-term capital gain taxed at very favorable rates.
Gotcha. Okay, that makes sense. And I should point out, you're a CPA by background, so that comes in handy. Wow. All right. Well, I know you love real estate. What is your sense of what's going to happen come March? I'm looking ahead a couple weeks. We've got the Fed sitting down. They're promising that they're going to raise rates. Do you think, Charlie, is there any chance that in light of everything that's going on in the world right now that they say, okay, well, maybe we'll hold off another month?
Absolutely not. We're in a very different environment from a monetary policy perspective compared to what we've seen historically. Interest rate policy has always been used as a tool to prevent inflation from occurring, a preemptive measure to stop inflation. We're in an environment where interest rate policy now has to be used to bring inflation down. Never before have we had to use interest rates to lower inflation. So the Federal Reserve absolutely has to raise interest rates. They have to continually raise interest rates over the next 12 months to get some handle on the inflationary pressures that we have in today's market, which, as you said, are now further exacerbated by the whole Russia thing. Energy prices, it could get as high as 10%.
Yikes. Yeah, no, I think inflation is heading only up. Hey, Charlie, it's so great to talk to you today. Thank you for taking the time. Thank you for explaining the entire Key City investment there again. I encourage people to listen again to just absorb it in detail. Thank you so much. Much appreciated.
Great. It's a pleasure being here, Trish.
Hang on. Okay. My thanks again to Charlie. So good to have him on and to hear that perspective. And again, if you were listening and you want to maybe invest in something like this, go back and listen to it again. I think it's worth taking the time to really digest everything that he had to say. Meanwhile, we're going to continue our conversation about the insanity of the world at this moment in time. It just isn't going away. And I have a lot of fears as we head into the weekend. So please join me over on Locals. I'm going to be there at 4 p.m. today. Again, that's 4 p.m. at trishregan.locals.com. And if you don't make that particular live Q&A, I do a lot of them. So go ahead, sign up, join me on that platform. It's a really special little place. I got to say, we've got a great group of people, small community, growing community. So tell your friends, come join it, be part of us. There's a lot of value add there, I'll tell you that. So thank you again for tuning in. Let's pray for peace over the weekend and hope that this gets worked out. I can't tell you how much it needs to get worked out. Have a good one, everyone. I will see you on Monday. My thanks again to Charlie. So good to have him on and to hear that perspective. And again, if you were listening and you want to maybe invest in something like this, go back and listen to it again. I think it's worth taking the time to really digest everything that he had to say. Meanwhile, we're going to continue our conversation about the insanity of the world at this moment in time. It just isn't going away. And I have a lot of fears as we head into the weekend. So please join me over on Locals. I'm going to be there at 4 p.m. today. Again, that's 4 p.m. at trishregan.locals.com. And if you don't make that particular live Q&A, I do a lot of them. So go ahead, sign up, join me on that platform. It's a really special little place. I got to say, we've got a great group of people, small community, growing community. So tell your friends, come join it, be part of us. There's a lot of value add there, I'll tell you that. So thank you again for tuning in. Let's pray for peace over the weekend and hope that this gets worked out. I can't tell you how much it needs to get worked out. Have a good one, everyone. I will see you on Monday.